Something massive is unraveling beneath the surface of the global economy, and it's far more dangerous than a simple trade spat. The 2025 US-China tariff war has ignited into a full-blown economic crisis, rocking stock markets, choking supply chains, and pushing two superpowers to the edge of an all-out financial war. Inflation is rising. American farmers are drowning in unsold crops. Chinese factories are losing their biggest customer. Tech giants like Apple and Tesla are caught in the crossfire. And the worst part? Neither Washington nor Beijing is backing down. This isn't just about tariffs. It's about two superpowers hurtling toward a long, bitter economic showdown, with global consequences. If you care about your wallet, your job, or your future, this is the story you can't afford to ignore. If you're new here, hit that subscribe button, because we break down the world's biggest shifts in plain language every day. Let's dive in. In April, President Donald Trump announced hefty new tariffs on goods from China. These tariffs were meant to punish China for what he called unfair trade practices. Trump claimed China had been cheating the US for many years by selling more to the US than it bought, stealing American technology, and hurting US factories and workers. The new tariffs were not just economic tools, they were political weapons. They sent a message to both Chinese and American voters that the US would no longer tolerate being treated unfairly. China quickly hit back. It announced a 34% tax on American goods coming into China. Instead of easing tensions, the US doubled down, imposing an additional 50% tariff on Chinese goods, bringing total US duties this year to a staggering 104%. Beijing immediately struck back, announcing a 50% hike on top of the 34% already planned, raising its total tariffs to 84%. But neither side stopped there. As of now, US tariffs on Chinese imports have soared to 145%, while China's tariffs on US goods stand at 125%. A full-scale economic clash with no signs of slowing down. This wasn't the first time the US and China fought over trade. Something similar happened in 2018 during Trump's first term. But in 2025, things moved faster and hit harder. Back then, both sides still talked and made deals. Now the situation feels more dangerous, and there are fewer efforts to find peace. The trade fight grew so quickly because it was about more than just money. It was about politics. In the US, Trump wanted to show strength before the next election. He hoped the tariffs would help him win support from workers and factory owners by promising to bring jobs back. It was a smart political move. Trump told Americans that this was a battle to protect their future. The idea was simple. Hurt China economically, and US factories will get stronger. Meanwhile, in China, the leaders also wanted to show strength. The Chinese economy was already slowing down. Growth had fallen below 4%, which is very low for China. If the government appeared weak, it could cause panic at home. So, the Chinese government responded with even higher tariffs, not just to protect their economy, but also to protect their national pride. China made it clear it would not be bullied. And the trade war started to represent something even bigger. It became part of a larger fight over power and influence between the two countries. Problems like Taiwan, the South China Sea, hacking, and control of new technologies all added to the tension. Talks between the two countries completely broke down in March 2025. Secret meetings between American and Chinese officials were suddenly canceled. No one knows exactly why. Some say the US accused China of spying. Others say China walked away after the US demanded tougher rules on technology and patents. Whatever the reason, the breakdown of talks meant there were no more chances for compromise. Now both sides are only responding with more taxes and threats. So, what exactly is being taxed? What products are caught in the middle? On the American side, Washington slapped new tariffs on a wide range of Chinese products, including smartphones, computer chips, and solar panels. These are everyday essentials for American consumers and businesses, and now they're getting more expensive. Tariffs were also imposed on electric vehicle batteries and crucial EV components, striking at the heart of America's clean energy transition. Even industrial machines used in construction and manufacturing are now facing higher costs. Beijing didn't stay quiet. China retaliated by hitting U.S. agriculture hard, placing steep new taxes on soybeans, corn, pork, and beef. These products make up a major slice of U.S. farm exports to China. American-made cars from companies like Ford and GM are now more expensive in Chinese showrooms. Aircraft parts, critical for Boeing, were targeted, along with high-end American technologies like semiconductors. These are some of the most valuable and strategically important products the U.S. exports. The fallout is already spreading across both economies. In the U.S., consumers are feeling the pinch. Prices are rising, especially for electronics and appliances. Inflation, which had finally begun to cool, is now climbing again. From groceries to gadgets, costs are expected to keep rising in the coming months. American farmers are in deep trouble. With China pulling back on purchases, crops are piling up with no buyers. Many small farms are losing money and closing their gates for good. Big American companies are also feeling the pressure. Apple recently warned investors that the US-China situation poses the biggest threat to its operations in 2 decades. Tesla is seeing falling sales in China, one of its most important markets. Boeing is facing turbulence as well, with orders slowing. While a few small US factories have seen short-term gains from the tariffs, those victories are fragile. Most of these factories still rely on Chinese parts. Without them, they can't grow or compete globally. The celebration may be premature. In China, the pain is just as real. Losing access to the US, its largest and most profitable customer, is a crushing blow. The economy is slowing further, with some experts warning growth could drop below 3% if the trade war drags on. Factories that once thrived by supplying American companies are now shuttered or running on half capacity. The yuan is under pressure. Supply chains, especially in high-tech sectors like chips and AI, are beginning to fracture. And inside Beijing, pressure is mounting. Leaked reports suggest top Chinese officials are scrambling to rescue the economy without appearing weak. Public anxiety is rising over jobs, prices, and an uncertain future. Some citizens are now openly asking, is this economic war with America worth the cost? So what happens next? That's the trillion-dollar question. Right now, both sides seem locked in a cycle of escalation. If Washington and Beijing continue raising tariffs and refusing to talk, the damage could stretch on for years. Markets are already spooked. April marked the worst month for the US stock market in a decade. China's markets are falling fast, too. World Bank analysts warn that the ongoing trade war could tip the entire global economy into a new downturn. Is this just round one? Or are we headed for something far worse? History offers a grim warning. Back in the 1930s, trade wars deepened the Great Depression. Tariffs back then led to global economic collapse. Could we be walking into the same trap? It's too early to say for sure, but many signs point to danger. Right now, the US and China are playing a high-stakes game. They're gambling with their economies, their workers, and their global influence. And the most dangerous part? There are no talks, no peace plan, no off-ramp. Trade, once a bridge between nations, is now being weaponized. And if both sides stop talking, what happens when the only moves left are the ones that hurt everyone? Both countries need each other, but how much and who needs the other the most? Let's first understand how deep this connection really is. In 2024, China was the 3rd biggest trading partner of the United States. On the other side, the United States is China's 2nd biggest market for exports. Every year, they trade more than $575 billion worth of goods, with $295 billion deficit in favor of China. But this relationship is not just about big numbers. It is about a huge system of shared supply chains, investments, and buyers that keeps the world economy moving. You can think of it like a global body. China is the factory, the US is the shopper, and money flows back and forth like blood through veins. Take Apple as an example. The company designs iPhones in the US, builds them in Chinese factories, uses parts from Korea and Japan, and then sells the finished phones all over the world, including in the US. Most of Apple's products, more than 95%, are made in China. Now let's flip the view. Chinese companies like TikTok and drone maker DJI depend heavily on selling to American users and making money from the US market. But what used to be just a future concern is now real policy. The US under President Trump has started again with new tariffs, limits on Chinese investment, and tighter rules for Chinese tech and green energy. China has hit back by stopping its money from flowing into the US, making it harder for US companies to operate there and building closer ties with countries like Vietnam, India, Latin America, and Africa. On paper, this shift sounds smart. But in real life, moving away from each other is not so easy. Countries like India have lots of workers, but they do not have China's factories, ports, or fast systems. Vietnam and Indonesia are growing fast, but they can only do a small part of what China does. On the American side, plans to make more products inside the US face serious problems. Workers are expensive, factories are hard to build quickly, and many industries still need Chinese parts. Even Tesla, which has promised to expand in the US, depends a lot on China for batteries and key materials. So, what does this all mean? Who is going to suffer the most from this breakup? The first group that will feel the pain is everyday people, consumers. In the US, almost everything in stores, from clothes and electronics to toys and furniture, comes from China. Without these cheaper imports, prices will go up. For example, about 70% of what Walmart sells comes from China. So when tariffs increase and trade slows down, Americans will pay more but get less. Chinese shoppers won't escape the pain either. US brands like Nike, Apple, and Starbucks are everywhere in Chinese cities. If these brands are forced to leave, or if the Chinese government bans them, people will lose jobs and have fewer choices. This will especially affect young people who grew up with Hollywood movies, American fast food, and Western products. Next in line are small businesses and exporters. In the US, small and medium-sized companies that sell to China, like soybean farmers in Iowa or airplane part makers in Washington, are already losing money because of fewer Chinese orders. In China, thousands of smaller companies that build things for American brands are also hurting. A research group called Rhodium Group says that if China loses long-term access to US markets, it could lose more than 1% of its economy's growth each year. And this isn't just about the US and China. The whole world could suffer. The global economy depends on US-China trade. If that breaks, then ports, shipping companies, and factories everywhere, from Europe to South America, will feel the shock. Prices could go up, goods could become hard to find, and economies could slow down. Back during the 2018 to 2019 trade war, the International Monetary Fund said that global economic growth dropped by 0.8%, and that was during a much smaller conflict than today's. Some countries might gain something from this mess. Places like Vietnam, Mexico, and Bangladesh are trying to become the new centers for global manufacturing. As companies look for safer places outside China, these countries might get new factories and more jobs. But even these rising stars have limits. Most of them are still too small or not fast enough to take over China's massive role in world trade. The US has elections in 2026, and politicians may not want to back down. Both sides want to look strong, not weak. Some experts think this could go on for months, or even years. If leaders in Washington and Beijing don't change direction, the world might be heading toward a permanent split between the two biggest economies. This could shape the future of trade, technology, and even peace. So what do you think? Will China blink first, or will the US double down? Are we witnessing the opening act of a new Cold War, or something even more dangerous? And the scariest part? No one's backing down. This isn't just a trade war. It's a battle over who will lead the 21st century. And the outcome could change your life more than you think. The world is splitting. And soon, we may all have to choose a side. Subscribe now and stay ahead of the storm. See you in the next one.